Good numbers here. Capital Tier 1 ratios coming in, 12.4%. That's above your target range. You've also got, of course, return on equity of double-digit proportions, which is pretty much in line with your forecasts here as well. So good numbers all around. But, the question is, can you, and what extent can you head towards this $7.7 billion of cost targets, savings, should I say? And how does that offset some of those revenue headwinds that you did allude to in the conference call?
Yeah, look, no, thank you for having me on the program, and certainly a good set of results, and even more important that they were very clean. There were no large notables of any sort at all, so that's the first time in quite some time. Pleased with the result. Look, quite a bit of it, though, is starting to reverse back some of the credit impairment charges we took last year as we looked at Australia with GDP declining dramatically, unemployment levels up. And we're certainly seeing a very quick recovery in Australia and in New Zealand, our two biggest markets. We are keeping a very close eye on our costs, and we've set ourselves the target of being at a lower cost base than we finished 2020 over the next 2 to 3 years, and looking to build very strong momentum in our businesses now in our core business bank and in the home lending market, which is another key market for us, and we're doing quite well now, building up good sales there based on really good interaction with customers.
Yeah, absolutely. And Ross, delving in a little bit, can the loan growth picture there really compensate for the margin pressure that you're suffering from right now?
Well, we certainly are seeing the growth in businesses. We are in Australia seeing the highest confidence levels of small, medium-sized businesses that we've seen since our surveying started about 30 years ago. So that's giving people a confidence to really get back and get their businesses moving, borrowing money for capital investment, and I think that's just started in Australia, and we're seeing that flowing through into our book. And we do see it because we're the biggest business bank, so we see the first signs of that, and it's going to be a business-led recovery. That does compensate for some margin compression. And we've seen that across the bank, less so in our core businesses, because we've obviously had to reprice some of our deposits down. At the same time, taking some pressure on the lending side. But we are seeing good momentum that was certainly coming through in the end of our 6 months, and we've seen it continue in April.
Ross, as you said, great set of numbers, but your stock's down about 3% right now. Could investors be disappointed because of the big uptake in pretty much overdue mortgages, missed payments, which were higher than your peers?
Yeah, the reason they were higher than our peers was we stopped we didn't increase any deferral periods for our mortgage customers at the end of the 6 months. And other banks, we understand, did. They rolled them over for another 4 months. So we're seeing probably what other banks will see in the next 3 to 4 months. Customers who are having some difficulty, having conversations with us about how do we get them back on track. Fair to say that about 70% of those customers are paying some money into their mortgage, but we have to register them as having difficulty, and we're dealing with them one-on-one. So I think we're just seeing what other banks will see, but we're seeing it earlier because of the actions we took 4 months ago now, and they've rolled through into 30, 60, 90-day buckets. What's new coming into our 30-day buckets is actually quite small. So we know this is the deferral, the group that were on deferral coming through, and we're working pretty hard with those customers to get them back on.
Ross, as you look to grow, are you looking at perhaps any acquisitions? Might you be interested in Citi's retail assets in Australia?
Well, certainly we do want to grow the bank. We ideally want to grow it organically, and you're seeing the momentum starting to build. We have just recently purchased a digital bank, 86400. It's had ACCC and APRA approval. We've still got some formalities to get through to finish it by the end of May. Look, I won't comment on individual assets that we may or may not be looking at, but my first strategy is to get the bank growing organically. If we can find assets that supplement us, that have skills and capability, I'm interested, but I won't be buying it just to bulk up. We can grow this bank, and we're showing that now. both at the personal and at the business level. And our New Zealand business is growing very quickly, particularly in the home mortgage market. So growth, yes. We've got momentum. I don't want to slow that down, and I also don't want to distract this bank. It's taken some time to build the momentum, and I think that's important for banks to have momentum, and we've got it. But look, as things go on, if I can find capability, I'm more interested in capability than necessarily just sheer assets.
Ross, I mean, working from home, of course, over the last year has been absolutely essential for not just banks, everybody. That's, of course, probably given you a little different way of looking at things. And we've heard from DBS, Standard Chartered and HSBC about reducing the amount of floor space and office space they have. Are you also considering that?
Yeah, look, we have seen quite a change in how our colleagues at work want to work. We haven't been saying to them, look, it's a 2 or 3 days in the workplace itself and the other 2 days or 3 days from home. Very important to have colleagues together for collaboration, innovation, and also learning. We're finding, if you've got experienced bankers sitting beside new bankers, they learn a lot quicker than they do over a training session. So it's essential for a bank, I think, to have our colleagues together. But it's certainly changing from 5 days a week down to probably 2 or 3 days a week. And that will mean over time we will need less space. But I don't see a major change to that in the very short term. But over the longer term, I think we will, as an organisation, require less space. We did some provisioning 6 months ago for a couple of buildings that we no longer required. And at this stage, we're just getting our colleagues back to work in an appropriate way. But numbers of them found, and we've found as well, that they can work very well from home, doing the job and saving them the travel and the inconvenience. But let me stress again, vitally important that we get people together for innovation, collaboration and learning and development. And I think that's 2 or 3 days.
Ross, just moving now to the macroeconomic environment, are you actually content as to what the RBA is doing right now, and what are the material unknowns that people have been mysteriously referring to? And I just want to get a sense of also, you on the call saying that SME growth was rather bullish as well.
Yeah, look, the big thing driving the Reserve Bank of Australia is getting people back into work, and then over time getting the wages up. We haven't seen a lot of wage growth in Australia for quite some time. The pandemic put a lot of people out of work and onto government support. Vitally important we get people back to work, and we're seeing our economics say that we'll have an unemployment level of about 5.1 by the end of this year and then into 4s next year. But I think one of the big drivers for the RBA is to get wages up across the board, not just in certain segments. So I can see what they're doing, and we back that plan.
Right.
We just need to be careful we don't lend money to people that they long-term can't pay it back.
Ross, we had breaking news just slightly earlier. We have China pretty much suspending economic dialogue with Australia, escalating tensions between the two countries. I mean, what's your take on it, and what kind of impact would this have on businesses?
Look, we have a fantastic market relationship with China from Australia. A lot of our product goes up into the Asian market, and China is vitally important to us. It's our number one partner for trading. So, the relationship is very important to Australia. There have been some impacts on some of the restrictions that China has put on some parts of industries in Australia. That has hurt. Let's be quite clear about that. But
Ross,
some of those businesses have also found other markets for those products to go to, and we see that through our trade finance figures.